only on Bloomberg Quint.
HINDALCO has had a strong FY18 on the back of rising prices and record production. To talk about not just the year that's been and the last quarter, but also the future outlook for the company and its important subsidiary Novelis, I have with me Satish Pai. Thank you very much, Mr. Pai, for speaking with us here at Bloomberg Quint. Hello. You had a good, strong year on an annual basis. The fourth quarter, though, was a little softer on account of EBITDA and I think both margin and profits. And I'm sure there are reasons for why you'll explain that on a year-on-year basis. But more importantly, I think, how does this set you up for FY19?
I think FY19 we are now well placed because going forward, you see the biggest problem in the business was the rising input costs. And I think that as a result of us being secure in coal and alumina, and the fact that CP coke and pitch, which was the other input cost that was going up, and we have now contracted it for the next 6 months. We see going forward the cost of production on the aluminium side has now flattened out. So we are in a situation going into next year where our resource securitization is there, our cost of production has flattened out, and we see an environment where the aluminium LME has started to go up. So that's going to be good for us. Now, the second thing I wanted to say is actually Q4 was pretty good. We did an EBITDA of nearly 1,806 crores, which was flattish with the quarter before. And if you look at the PAT was 27% up.
You're doing quarter on quarter. I was looking at it year on year.
Yeah,
so
and year on year it looks even better because 1934, if you look at the press release, that was our PAT for HINDALCO India. We are up 36% year on year.
So your EBITDA, I thought, was down 6% at 1257.
No, I think what you're doing is you're taking the standalone.
Yeah, I'm looking at standalone, not with the Novelis.
But you see what we have been explaining to the analysts. HINDALCO India is the aluminium business plus Utkal, which is the alumina. All the alumina of Utkal goes into the aluminium business of HINDALCO. So you have to put aluminium and alumina together to look at the HINDALCO results. So from this quarter onwards, we have been now declaring HINDALCO India results, which have been up.
Inclusive of Utkal.
Alumina, yes.
Yeah, though I think there were some concerns in previous quarters on Utkal being able to make the most of the rising raw material prices, and maybe that was not passing on to the margins of HINDALCO. But I won't dwell on that a little bit. Before we get into talking about your securing of resources, I want a comment from you on the domestic and global economic environment at this point in time, and how strong you see demand growing in both, in India and outside.
So let's start internationally. I think internationally the demand for aluminium has been very strong. So if you look at US and Europe, aluminium demand has been very strong, driven by the automotive sector and the electric vehicles. If you come to China, the Chinese demand has also been remarkably strong, here driven by the building and construction segment. So worldwide aluminium demand has been very strong, and looks like we are projecting going forward as well that the aluminium demand will continue to be strong. If you come to India, the first half of this last year was a bit weak because of GST rollout, etc. But since November, the demand has started to pick up. So aluminium actually grew 9% year on year, with most of that growth coming December to Q4. Copper has been a bit more subdued. It is sort of flattish, but Q4 copper grew 4% quarter on quarter. So the Indian demand for commodities in the last quarter really started to pick up. So now we think that with the growth projected for the country, the infrastructure investments going in, the electric vehicles we are talking about, we think that aluminium and copper demand is going to be pretty strong. So we are saying about 7 to 8% year on year for this coming year. For aluminium, and for copper about 3 to 4%.
So you said 9% for FY18.
Yes.
Most of the growth though coming in from the December to March period, and copper was up about 3.5–4%.
No, copper for last year was flattish.
For flattish,
Yes. Going forward, copper demand in Q4 picked up.
Right.
So quarter to quarter, Q4 to Q4, it was
Okay.
4%.
Okay.
Year on year, it still looks flat because the first 3 quarters were
And
very low.
FY19 will be an improvement or flattish still
We
for
are
copper?
saying copper will grow 3 to 4%, and aluminium will grow another 7 to 8%.
On the back of the 9% growth that you're
Yes.
seeing. Okay, it's interesting. Where is your aluminium demand coming from if I were to break the two up? Because I know in previous interviews you've stressed on the fact that almost 40% of aluminium consumption is electrical sector, and that's not really a sector that, you know, where either growth has been very good or, you know, purchasing has been very good. So
Well,
I'm just curious to know, have you diversified customer mix or things like that?
No, actually what you're talking about is the power plant side.
No, I know that you provide to the cabling side.
So the conductor cable market and the grid investment has picked up a lot.
Okay.
So a lot of orders have come in.
Okay.
So that's why we have seen
But
it.
this is sustainable, you think, or is it because you've been able to, because I know you've spoken of high-speed rail,
Yes.
I know you've spoken of the auto sector as well. These are all areas. You said housing might hopefully provide you with that additional impetus and demand. Are these the factors that are kicking in, or is it the traditional demand areas that have, you know, sort of bolstered your view?
The growth
towards
going
9%?
forward, we are actually counting on the other sectors now.
Okay.
So we are seeing packaging sector pick up. We are seeing the bus sector picking up. We are starting to see demand from the affordable housing. I'm not even talking about the high-end housing. In the affordable housing, there is a concept of trying to build these houses fast using aluminium molds to make the walls and all. So we are starting to see demand from that picking up. So transportation, building and construction, infrastructure, we are starting to see Indian demand of aluminium picking up. Even in the aluminium sector, in the automotive sector, we are now starting to see the big Indian auto companies starting to talk to us about aluminization.
Okay. Is that only
Because
towards
as
the
this,
EV shift, or is it only towards the EV shift or otherwise as well?
No, it's because in India, the SUV or the sort of what you would call the crossover segment is actually growing the fastest.
Okay.
So in those cars, if you have to meet the emission norms of the Bharat 6, you have to lightweight them.
Okay.
And that is where the aluminization is going to start.
Okay, so if 40% of your demand traditionally came from the electrical cables, if I've called that correctly, electrical cable segment, and 60% was the rest of all of this, do you see that proportion changing dramatically and your dependence therefore on demand growth to come from the electrical cable segment going down considerably?
It will go down with
this
time.
year or in time?
In time, it will take a few years because internationally the electrical sector is less than 20%.
Okay.
Actually, the building and construction sector is the largest.
Yeah.
So if you see the Indian growth happening and if affordable housing is taking off, which we are starting to see
But
now.
you're seeing actual orders
We are actually
for
seeing,
these prefab walls that you call it, right?
Yes.
Okay.
Yes. So if that is going to happen, then slowly I would expect it would take a couple of years to happen in India, but you will start to see our dependence on the electrical sector come down and the rest of the sectors coming up.
Okay, and what is, you know, what have you predicated your copper demand on?
The copper demand actually is coming from the electrification. So copper is used mostly in copper wire.
Right.
And in the winding wire for motors, generators. So demand for all that has picked up.
Okay.
And the other interesting thing is that when you do high-speed trains, the electrification there requires a very high end of copper. So we have started to see even that demand start to come in.
But we don't do high-speed trains in India yet.
So they are starting to, well, high-speed meaning...
the orders aren't coming in as yet for this. You're hoping that it will come in, is
no,
it?
the 150 kilometers per hour
Okay,
is
that's
a
what you mean by
high-speed
high-speed.
train.
Right. Okay, thank you for correcting that. Okay, so you're saying that these newer areas of demand are largely what makes you feel more positive or optimistic about FY19.
Yes.
And therefore, this is all sustainable, because otherwise you were depending largely on electrical cables.
Yeah.
And you were at one point, not many months ago, sounding not very optimistic about growth. So
Q2
was around the
when
time,
I was very nervous. Right now I'm feeling very optimistic.
Okay, excellent. Okay, I want to talk about prices. That's been the big story in the commodities sector for the last now several months. What is your outlook on aluminium prices? I use aluminium together. You've had, you know, I think when it comes to the raw material, large shutdowns, inventory. So you've had the Rusal issue, you know, with the sanctions. Then you've had shutdowns. Then you've had China inventory issues. So what's the outlook on, you know, global demand, supply, and therefore pricing?
I think, you know, the Rusal was a shock to the system. And there was a period of time when the LME spiked up to 2600, 2700. But I think the dust is settling.
So we're at about 2200 right
We're
now.
at 2300.
2300.
So I think that the 22 to 2300 is where we are going to be for the rest of the year.
Okay.
I think China is showing remarkable discipline, though I am a bit worried whether Chinese aluminium that now cannot go to the US or is, let's say, more difficult to go to the US will come into India. So that is one big concern that through the Aluminium Association we have voiced to the government, that we need to be really vigilant that as all these countries start to take care of their industry, we don't become the dumping ground for everyone's excess
But as
aluminium.
yet that has not happened.
We have seen in April signs of that happening.
So local prices have started falling because of that?
Local prices have come under pressure, and more than local prices, we have started to see imports start to go up.
Okay.
So, you know, since we last talked, last year the imports as a percentage of total consumption was about 52%. This year, when the March 18, that year that closed, it has gone up to 54%.
It's a very marginal increase, right?
Well, 2% of 3.5 million tons is quite a lot, especially taking into account that you have so much aluminium capacity in India. So we find it's rather strange that India has 4 million tons aluminium capacity. We consume 3.5 million tons of
Why
aluminium.
are people importing?
Why are we importing 54% of that?
Okay. Fair enough. You suspect this might become as severe as you know, the steel industry suffered a few years ago, and therefore are hoping as an industry to lobby the government to look at similar measures?
We have started to talk to the government and started to work with them, I would hope, proactively rather than reactively. I don't think we need to wait for the situation to get bad and then react. We can probably take some measures like quantitative restrictions up front.
Okay. You said 22 to 2300 is where you expect prices to stay for the better part of the next few months. Let's put 3 to 6 months, because it's really tough to call beyond that. You're hedged at that price? Because I imagine that, you know, I think the bulk of your purchases are hedged, and the big question that's out there is at what price are you hedged, and therefore any, you know, large increase in prices, will that benefit you or not? So
look, the first thing I want to clarify is that we don't hedge large percentages. Our hedging is a insurance policy to if the LME goes down. So normally, like for this year, what I told the analysts already, we have only about 30% hedged.
okay.
And that hedged levels are at 2100. So we keep the remaining 70% to, because we think the commodity cycle can be strong.
Okay.
So our policy is that before we get into the new year, the previous year itself, we will do what we call our core hedges. And we try to do that at a level that protects our budgeted EBITDA.
Okay.
So that in case, it's an insurance policy. So if the LME goes down, like 2015-16, that hedging actually saved the profits of Hindalco.
Okay, so can you explain this? Sorry, I may not understand all the complexities of how this market works, but you've hedged to 2100 and you've hedged only a small percentage of your purchases at this point in time. I think the other thing we were trying to understand is what is the sensitivity of your EPS or even EBITDA to any increase in the overall price? Is there some way you can put this together and explain to me what happens and how your, you know, EBITDA gets impacted with every, let's say, dollar increase?
So I'll give you the more or less the ballpark numbers, because we do that sensitivity analysis. Every $100 of LME movement is about 600 to 700 crores of EBITDA falling to the bottom line.
Okay. Okay. So that answers both of those questions. What's the outlook on copper prices?
Copper prices, you know, they're currently at about 6,800. We think that this year they're going to be in that range, around 6,800. So it should be stable. There is, you know, not enough copper concentrate coming into the market. That's why TCRCs have gone down.
Lower,
So I suppose you know very well that as copper prices goes up, normally TCRC goes down. So this year TCRC is down by 11%
you
compared
flagged
to
that off in your analyst presentation as well. I saw that.
Yes. So we think that, you know, but there are now more and more mines. As soon as copper prices go up, new mines start to come into play. So by hopefully in the next 2 years, if more mines come in, then TCRC should go up again.
Okay, great. Coal costs is something, and coal availability has also been a bit of a bugbear over the last year or so. How have you been able to take care of that? There are other raw material costs as well that we should probably talk about, I think caustic soda, etc., etc. So you maybe want to, in one response, try and give me a sense of what the other input costs are looking like.
So let me first start by telling you that a ton of aluminium, 40% is cost of energy, which you can directly say proportional to the cost of coal. 20% is alumina, and 20% is carbon, which is CP, coke, pitch. You can put it all in there. The middle one, which is 20% of alumina, Hindalco is neutral to it because we have Utkal. And we are fully integrated. So the fact that alumina prices shot up does not have an impact on us. If you take the price of coal, we actually have done this year quite well because we had booked quite a lot of linkages. We have certain part coming from our own coal mines, and the remainder we have got from auctions. It's true that in the monsoons and all that, we have problems in getting rakes and all that. But when I look back at the year, we did better than what we budgeted on the availability of coal as well as the pricing of coal. So coal now going forward, we are running into the next monsoon. So I worry about,
the same
issues. Will power plants, the power plants run out of coal and government divert theirs, which will make us suffer.
Which is an actual serious concern right now.
Yes. Will the availability of rakes be there? Even if Coal India has coal, can I get access to it? So these are things from an operational point of view we sit and plan and worry about every monsoon. But theoretically, we should not have a shortage of coal. There is enough coal here.
And pricing?
And pricing, I think, Coal India increased in January by 11%. We have managed to mitigate some part of that 11% because we got percentage of linkage realization was slightly higher. For example, if we get 100 tons through linkage, normally the amount we get is about 70–75%. We never get the 100. So if you get 70 or 75, you mitigate, you buy that much less on the spot auction. So I think on coal, we think that we are reasonably okay. Alumina, we are neutral because it's internal. CP coke, pitch, we reached the maximum prices in Q4. April and May, I'm starting to see it has flattened. So I think my cost structure of Q4 will hold for the next few quarters.
It's interesting you say that because I think one of the key risks you flagged in your analyst presentation, which I saw off your website, I was not at the analyst meeting, was upward trend in input costs, but you've also mentioned that you expect it to stabilize in the next coming months.
That is still a risk because you see oil prices, today they're at 70. If they suddenly shoot to 100 because some geopolitical events happen. So input costs, I would still highlight as a risk. I'm saying that currently I'm feeling a little bit confident that at the current Q4 prices, I'm stable. By the way, they're high. Our cost of production is around $1,700 per ton. It's on the higher side, but of course LME is also 2,300.
I also want to talk about Novelis since we're discussing in detail aluminium. I think the overall picture of Novelis, you haven't offered any guidance as yet on Novelis on what FY19 is going to look like. So the more detail you can give us on what the outlook is, the better it will be for us.
I don't think we give guidance.
Or some sort of impression on what the year holds for you.
No, I think from a business point of view, Novelis had a record shipments of 3.1 to 188, so 3.2 million tons. They're going to do about another 80 to 90 KT more. And I think that they will be able to sustain their EBITDA per ton. So they had a record 1.215 billion EBITDA this last year. We think they're going to do more than that in the current year. So the prospects for Novelis look good. They are on the upward trend and largely driven by auto. So they came out with 20% and we have started to invest in more auto capacity. We announced the 200 KT expansion in Kentucky. They actually broke ground on Monday. We will probably announce something in Asia very soon. So Novelis is stable. Their EBITDA per ton can be sustained. Their automotive capacity is going up. And we are going to be investing more in growth there.
Okay, what does that mean? Investing more in growth means what?
These organic expansion is what I'm talking about.
Well, of course, you're not going to answer the question on the inorganic bit, right? Yeah. No, but I'm curious to know. So Novelis has a tougher time being able to pass on higher input prices, right? So
not really, because for Novelis, the LME is a pass-through.
Okay.
Their conversion premium is that's their pricing, and that's where they make their profits from. The LME is a complete pass-through for them.
Higher metal price does not make it tougher for them to make a profit because they cannot pass all of that through to their value-added customers.
It's actually good for them, and I'll tell you.
Because it's a pass-through altogether.
No, that's because they use 57% scrap, and you buy scrap at a percentage discount, which is called the scrap spread, to the price of the metal. So the higher the metal price, the more the scrap benefit for Novelis.
Okay, so you're saying that higher prices of the commodity itself will not impact Novelis negatively at this point in time?
No.
Okay.
What is not good for Novelis is when the premiums fluctuate too widely, because they are offset hedged. That's why the LME is a pass-through for them. As soon as they buy the metal, they hedge it, and so there's no impact. But you cannot hedge the premium. So if the premiums go up and down, then they can get affected.
Okay. And is there an outlook on that?
Premiums in the US have spiked up because they have put the duty on. So that's why the duty has been built into the Midwest premium, which is at an all-time high. In the US, the premium is a pass-through as well, along with the metal, so no impact on. If you looked at the transcript of their call, they made it clear that it does not have an impact on them.
Okay. Across both, I think at Hindalco, Novelis as well, I think one of the key focuses has been deleveraging, reducing the amount of debt, which is something that you've been reasonably successful in. I'm just curious, are you positioning yourself at this point in time on big organic or inorganic expansion? And there's two parts to that question. One is, do you feel that this commodity upcycle that we've seen is sustainable enough for you to now start investing dramatically in more capacity? I know you're doing some brownfield at Utkal. I know you're doing Kentucky for Novelis, but are you looking at more ambitious plans than that?
So let's put it this way. Hindalco and Novelis, with the balance sheet strengthened, as you mentioned, our consolidated net debt to EBITDA is now 2.82.
Yeah.
So we are now positioned to look at the next growth cycle. That growth cycle will come from organic means primarily, but we will also consider inorganic where it makes sense.
Sure.
The numbers have to make sense.
Yeah. What makes sense to you?
Well, it has to give us the right rate of return. So, you know, we are not going...
Is it a geography-based thing?
Well, your rate of return is, whether you're in dollars or rupees, is different. So that way your rate of return can vary whether you're international or Indian. But we will not do anything that destroys value for our
No, of course.
stakeholders.
Mr. Pai, you would understand. I did not expect you to sit there and tell me we will do anything that will destroy value. But I am trying to understand whether this is the time to bet big on substantial capacity addition, whether it's organic or inorganic. Substantial, beyond what you've already announced.
I think what we are doing organically is quite substantial.
Yes, beyond that, let me say, you already announced that. Should I consider that there's enough bullishness on the sustainability of this commodity cycle for you to go beyond that?
I think that organically Novelis will continue. As I told you, we'll probably announce another line in Asia soon.
Another line in Asia?
Asia, because we just announced in US, Kentucky.
But when will that finish? Because you just did groundbreaking, right?
It takes about 24 to 26 months.
So sometime by the end of 2020?
Yes.
Okay.
And we think that it is that time cycle is fine because the auto capacity is also ramping up, meaning the aluminization of automotives is happening. You know, if you look at the CAGR, it's like 70–80%. But we have just reached a demand of about 1.5–1.6 million tons of aluminium in auto, whereas the steel used is like 70–80 million tons. So we have a long way to go.
Replacement opportunity to take
so we
place.
will constantly add organic opportunities in Novelis, and you will see the announcement coming out on a regular time frame.
And is this linked to broad-based auto industry growth, or is it also linked to the fact that, you know, especially in the West, the move towards electric vehicles, you know, dominates the consumer trend at this point in time, and are those vehicle types, you know, more aluminum dependent than steel? Is that?
So here is the interesting thing. So there are two things happening. One you pointed out is electric vehicles. As you electrify, then you get more aluminium intensive. because you really need to lightweight to get the distance.
Yeah.
So that is one trend, but that is a nascent trend because the number of electric cars today are quite small.
Sure.
So it's going to take a number of years to come up. Where is bulk of our orders going is that people are buying larger sedans and SUVs a lot more than smaller cars.
Okay.
So if you have to meet the emission norms of the US or Europe, you have to lightweight.
Okay.
So the Ford F-150 is a huge pickup truck. That's the first one in the US that went all aluminum.
Okay.
Right? So Jaguar has always been all aluminum. So what we are now seeing is the other auto companies getting into aluminization. So these two trends are going to happen, the EV trend as well as the SUV crossover trend, lightweighting.
Okay.
And both those are contributing to the aluminum demand.
Okay, so sorry, we split into this when we were talking about organic, inorganic growth. You were talking about Kentucky, 2 years there, another line in Asia, you said.
Coming.
Is it?
And
Where
more coming.
But that's under Novelis, right?
All those automotive lines are under Novelis.
Okay.
Yes.
What about Hindalco? Is that looking at, besides the Utkal expansion, anything else?
Downstream. So we had already announced that we'll be spending 6,000 crores over the next few years into downstream expansion. So we make 1.3 million tons of aluminium, and our downstream capacity is only about 300 KT. I'm not counting the wire rod that goes into the electrical sector. I'm talking about rolled products, foils, and extrusion. We want to go from 300 to 600 KT over the next 5 years. So we'll be putting in 5,000-6,000 crores over the next few years.
And these are all efforts that will help boost margins over the longer term,
yes,
right?
because over aluminium, you will get another $150 a ton of EBITDA.
Okay.
So that's why I said that we have got large plans. So we don't have to do anything.
Okay. So what you have already is substantial according to you. There's nothing further than this.
And we keep looking for
opportunities. Are you buying Aleris?
What's that?
Okay. All right. I had to try though. One last question. Yeah, I have one last question. I think you already answered it to some extent. We've seen the developments, and now I think some of those fears have also ebbed. But we are living in a protectionist world suddenly, right? And I think, commodity has been at the core of the conversations that many of the countries have had, especially with the kind of capacities that China has built up. How much of a risk factor would you say that is for 2019?
Largely the risks are known. Let's put it that way, there's no unknown risk in that. We know that China has got capacity, but what we have seen in the last 6 months is that they seem to be very serious about the environmental issues, and they seem to be quite serious as not to aggravate trade tensions by trying to export a lot more. They are trying to work with the US, etc., to keep the trade balances at reasonable levels. So yes, there is a protectionist environment, but I think people are also practically realizing that you cannot be islands anymore. There has to be some, good amount of global trade going on. My only worry is whether in India we will be able to protect domestic industry, because the only place in the world that's growing, is a huge economy doing very well, is India. And I want that, because of the free trade agreements we have signed, we are discussing RCEP, of which China is a part. We do not do anything that will make India become a little bit of a dumping ground. That's our biggest worry.
That's your biggest fear. And you've reiterated a couple of times through the course of the interview, so I suspect that's your biggest risk factor for 2019.
Mr.
Pai, always a pleasure speaking with you. Thank you for your time.
Thank you.